Alright, what's up guys? So in this video, I want to show you a very simple and easy technique to use one very simple indicator to determine which dip is the dip to actually buy. Alright, so before I show you which indicator I'm actually talking about, I want to ask you guys to like the video and subscribe to the channel if you're liking this content and want to see more. Right, so we're watching Cake here on FTX, the Cake Perpetual Futures contract, and I'm going to show you two setups here on Cake. First without the indicator, and then I'm going to show you with the indicator, and we're going to look at the differences, and the differences are huge, right? So we play forward right here, and first of all, I want to say that my own trading system is based on the break and retest. Like in an uptrend, you see a resistance level, you wait for the break above the resistance level. You don't want a rounded retest of the resistance level and hoping that that resistance level is now support, right? And I want to enter when there's a bullish engulfing candle or a bullish pin bar candle on the level. So let's look at the Cake right here. We have a breakout. Price then comes down to test the level right here and forms a bullish pin bar, right? So we enter. Obviously the entry triggers are going to be based on several different things, but right here I just want to show you the difference between these two setups using the indicator. So I want my stop loss to be below the candle. I would then take profit at, let's say, a new high, so around 2. Let's say we're going to take profits at a 2.5, something like that, right? So let's see how this plays out. Obviously, it didn't really play out that well, right? So we'll look at the next resistance area. Let's wait for a break of that resistance area and then go long if there's a bullish pin bar or a bullish engulfing on the test of that level. And right here, you see a beautiful bullish engulfing candle on the level. I enter here with stops below the wick, and let's say I take profit at 2.5, right? So let's see how this plays out. Well, that obviously plays out much, much better. Now, let me show you this, but I'm going to be using the stochRSI indicator to try to determine which dip is the actual dip to be bought. Right, so let's do this again, but using the actual indicator. Let's wait for breakout. Now of course, I should probably add the indicator as well. Here it is. So let's see if we get a test of this level, right? That's the test of the level. Now, what I want to be doing here is I only want to enter this position if the stochRSI indicator prints a bull cross below 30, which is here. There is no bull cross below 30, but there is actually a bear cross right here. So this would not be an entry. This would not be an entry. So I would not get stopped out on this one because I never entered that one. Now, let's look at the next setup. We got a breakout. Let's wait for the retest. Let's wait for the retest. And what do we have here? Well, we have the stochastic is below 30 right here. And if you go to the next candle, you have a bull cross on the stochastic. And here's the difference. You now want to enter. So what you can enter, what you can do here is you can look at the stochastic and view it in two different ways. We know that on this test right here, stochastic were trading up here. On this test, stochastic were trading down here. So only the fact that the stochastic were trading below 30 here, but above, way above 30 here, makes this setup more interesting. So being a little bit more patient, you see that the stochastic actually prints a bull cross on the next 4-hour candle close. So you could go long here with stops below these wicks, which would have been obviously the better option. But if you go to the 1 hour, you can also have a beautiful, beautiful entry where you enter right here, and the stops would be below those wicks right there. So you now have a entry confirmation on the 4-hour, and obviously this setup that was 2.5 now turns into easily a 3.5 or 3R trade. And this obviously turns out quite nice, right? So you can do this over and over again, right? You know, wait for a break and retest, and only go long if the retest also prints a stochastics bull cross below 30 on the actual level. Now, of course, this is long examples. For short, it's the same thing in a downtrend. Wait for support to break, go short on a bearish rejection at the previous support, now hopefully resistance, and only do so if there's a bear cross above 70. I think that this is a very, very easy way to increase the probability of your setup. So if you're not using the stochasticRSI indicator, at least try it out. So watch my backtesting video that I published yesterday and try it out, right? Use that backtesting template, use your strategy that you're trading on today and backtest it with this template right here. And I also have a confluence meter right here where you can actually check the box, 1 for yes, 0 for no, and see if the stochasticRSI is actually giving you a better win rate and a better average risk to reward. So key in trading, get new ideas, backtest, try to constantly develop your edge, and this is one way for you to do so if you haven't tried the stochasticRSI in your trading. All right, guys. Hopefully you find these quick little videos entertaining and helpful. If you do, please leave a like and subscribe to the channel, and I will see you guys in the next video. All right, take care.